Robert, in your report today, you say the economic data for the week was generally positive. Let's start with retail sales up about 0.5%. What does that tell us?
Yeah, Susan, that was a nice number to see. We did get a boost on unit auto sales for the month, and that was certainly a major component of that. But other categories were up as well, up 0.5 for the month on total retail sales. The reason why that's nice to see that is that is a component of total consumer spending, and that is one reason why we're seeing estimates for second quarter GDP nudged up a little bit. Most of them are still centered around 2%. We're at 1.9, so we're right in that range, but the estimates are coming up a little bit, looking at stronger consumer activity.
Well, let's talk about inflation and what does that mean as we look toward the meeting with the Fed coming up this week?
Yeah, that's an important consideration. We've got both the consumer price index and a producer price index for May. They were both up 0.1. Generally speaking, inflation numbers are coming in fairly weak, below the Fed's so-called 2% or near 2% target. And so this does beg a question. If the Fed is continuing to miss its inflation target, should the Fed start cutting back on interest rates? And that, in combination with some other softer data, we had soft employment numbers last month. We also see international conditions cooling down a little bit. Nothing is in full retreat right now, and I don't want to give the impression that the economy is sliding over a cliff. But now is the time for the Fed to have a good discussion about when is the right time to start cutting rates. I think they will start in July. I don't think they'll do anything next week, but they'll start to lay the groundwork for an eventual rate cut, perhaps sooner rather than later.